Welcome to The Golf Course, a modern forum for business conversations in insurance. I'm your host, Carrie Ann Nadeau, founder and CEO of ODN. On The Golf Course today, I'm joined by Greg Donaldson, a researcher with Aite Group. Greg just wrote and published a research report asking consumers how they feel about getting data and insights from their insurance carriers in exchange for telematics data. I think this podcast in particular draws into question the status quo of just giving away discounts or coupons. Really envisions a more efficient, engaging, and profitable future for insurance. Let's tee it off. So welcome back to The Golf Course. A very special guest with me today. His name is Greg Donaldson, and he's actually a senior analyst at Aite. Greg, I've invited on the show today because he just wrote a really phenomenal report that I dug, every finger into and was so excited to see. It's really new and original research. The report is called the U.S. Auto Insurance Increased Engagement with Personalized Advice Programs. And I think it's going to be highly interesting in this conversation, highly relevant to companies that are maybe interested in telematics or the future of auto insurance in general. So welcome to the show, Greg.
Thank you very much. It's good to be here.
Yeah, well, you're actually tuning in from Germany, I hear.
I am. I've spent a little over 25 years in the insurance industry in the U.S. And then when I left my job with a tier one insurer and took my position with Aite Group as an analyst, I was given the flexibility to work from pretty much wherever I like. So I decided that maybe a life change was in order, and we're trying out Germany just to see what it's all about and how much fun Europe can be.
I love it. I noticed the European map over your shoulder as well. So you're a relatively new transplant, still maybe learning.
Yes.
That's wonderful. Well, Greg, I wanted to invite you on the show specifically for this report. So maybe we start there. Really love to hear a little bit more about your inspiration for writing the report, why you thought it was so relevant to add this content into this space.
Sure. So one of the things that we've tried to do at Aite Group on the insurance side is we've tried to think about how technology is really impacting the industry. And the more you start to think about that, the more the subject of new and unusual data comes into play. If you think about insurance traditionally, it's always been around, okay, for rating your auto insurance, are you married or single? Are you male or female? How old are you? How long have you been driving? Where do you live? Those kind of things. A lot of static information. It really doesn't do anything to tell the insurance company how you drive over the course of your life, whether you improve or not, whether you change jobs and have to drive a more risky route or a less risky route. So all of those are variables that were unknown. Well, data exists now that can really answer some of those questions. And the interesting thing is that from a consumer standpoint, it's kind of scary, but at the same time, it's easy to understand. It's easy for me to understand that, you know what, I drive a very busy highway to and from work every day with a lot of other drivers, most of whom are not paying attention. There's a risk there. And that should be reflected in what I pay for auto insurance, as opposed to somebody who works from home and doesn't drive very often. So with all of that new information coming out, one of the things that I tried to think about was, all right, we can ask the vendors that are selling the devices to track it, and we can ask the carriers what they all think. But what do the customers think? That's a little bit harder to get your arms around. So I went and those of us on the insurance team here, we kind of got together and talked about how can we approach that? And we wanted to do a test sample. So we started with US only, and we wanted just a small representative sample of people. And we did it for auto insurance, homeowners insurance, life insurance, and health insurance. And we developed our own survey. And the idea was that we wanted to find out, are consumers really buying and using connected devices? Do they understand that those devices collect data that can be useful to other people? And would they be willing to trade access to that in exchange for something? Mm-hmm. I think the most common thing that people would be familiar with is a lot of the devices that are out there now where you go to your insurance carrier, they give you a device, you plug in your car or an app on your phone, it tracks how you're driving and you get a discount. There's almost every top 10 carrier has one now. And most carriers, if they don't offer one now, they've already got it in the works. And there's a lot of vendors that offer those. But if you think about it, a discount is just one aspect. And a discount is comfortable for carriers to think about, right? We wanted to kind of look beyond that. We wanted to look at, okay, is a discount the only thing? That seems to be the only thing the carriers are focused on, but is that the best option? So we expanded our questioning and we wanted to ask about, well, do you necessarily prefer a discount? Maybe you prefer getting a gift card. Every time you use the app for 30 consecutive days, you get a $20 gift card to a gas station. Or maybe you get coupons to get an oil change. So there's something that's appealing to you that's different than a discount. A discount when you're paying for auto insurance may not seem like a lot. It may be hard to quantify in your head. So from a psychological standpoint on the consumer side, maybe it's better if I can hold that gift card in my hand for $20 because now I know that there's a value there. And then we went one step further and we're like, okay, well, these devices can also give you a lot of feedback about how you drive or how you to think beyond auto insurance, even how you operate your home, how you take care of yourself. And we wanted to ask, what if your insurance carrier really wanted to just partner with you and give you really good detailed information about things that maybe you don't think about, such as on that ride to work that you think is, it's very stressful, it's bad. What if it was a different way you hadn't thought of? We all have technology in our pockets that can get us from point A to point B, but it doesn't always suggest the safest route, or it doesn't always suggest a route that can help you avoid the most dangerous intersection in your city. What if that was something that your insurance carrier offered? Or what if they gave you information about how to live a healthier lifestyle, how to better protect your home in the case of you going on vacation for an extended period of time? Any information like that in exchange for you giving them some data about how you operate your vehicle or you live your life or work your house. That was really the inspiration behind this entire endeavor. And what happened was we did the questionnaire and our objective was to try to get, first of all, we wanted to focus only on policyholders. So we didn't want it to be, there are general consumer surveys that are already out there. We just wanted to talk to people who not only had insurance, but were the key decision makers in that process. So we could kind of isolate that thought process away from the general consumer, broad spectrum ideas. And what we did was we started small. We funded the entire things ourselves. We didn't want anybody else partnering with us or getting involved in the process. We simply wanted to find out, what do consumers think? And we thought, this could be some good information. Well, what's happened is we've gotten such great feedback. In the end, we're going to wind up with reports on homeowners insurance and renters insurance, reports on auto insurance, health insurance, 2 different kinds of life. And it's been so successful, we're looking at expanding it and possibly doing it in other parts of the world and then coming back to the US and expanding it. But really the idea was just to find out what consumers think. And fortunately, they gave us a lot of great information.
That's awesome, Greg. And for my viewers who are regular listeners of the podcast, they'll realize how excited I was to read and hear about this research, because I think you're exceptionally correct in saying that we haven't had the opportunity or haven't been so forward thinking as to ask the customer, would you enjoy this type of information? Are you aware of the risk around you? And who's giving you those insights? How are you getting that information now? And maybe how can an insurance carrier be a better partner in that process? So I'd love to dive in on some of the results. Like, I think everybody's
Sure.
sitting at the edge of their seat saying like, well, what'd you find? I think might be really interesting to start with this question of like people understanding the risk around them, that risk is dynamic. Do folks have an awareness around that? And when it comes to solutions or things that they're looking for, what are they looking? Are they looking yet? Do they know that they have a problem?
No. So the answer to that question kind of comes from two aspects of my career, both this survey plus the 25 years that I've spent working in insurance before. Generally, consumers don't fully understand the rating process of insurance, and they don't want to. If it's easy to understand, that's better. But if it's not, they're just going to be frustrated, and it is what it is, right? So I think there's an opportunity there. And this is one of the key takeaways that I think that this survey kind of drives home, is that this has always been there. The insurance industry, the carrier that can identify the best way to explain why somebody pays the rate they pay, that carrier is going to have a leg up when it comes to customer engagement, customer loyalty, customer retention, because the customer is going to understand and they're going to say, okay, look, I get it. But that's really challenging when you say, okay, because you told us that you were married 4 years ago when you got your policy, that's why you pay what you pay today. That doesn't make a lot of sense. Or
Right.
even worse, once you bring credit into the equation, which has been widespread in the United States over the last, 10, 15 years, once credit comes in, now it's even more confusing. What does whether I pay my bills on time have to do with how well I drive my vehicle? Whether there's a correlation there or not, it's difficult for a consumer to understand. So what telematics does is telematics actually gives the carrier a way to connect how somebody drives their vehicle to how much they pay. And there's usage-based insurance gets thrown around a lot, but really if you can get somebody to understand that how you drive your vehicle and where you drive your vehicle is really what's going to cause your rate to be what it is, I think people understand that.
Yeah.
And even if you go, and now the next step beyond that is to try and explain to people, okay, you're just not a good driver, because everybody thinks that they're a good driver. But that's the next big hurdle, I think. And the more people that use this technology, I think the more that type of person is going to understand that maybe I'm not as good as I thought I was.
Yeah.
And maybe there are some things I can do better.
We're as good on the measures that my insurance carrier is using to qualify whether I'm a good driver or not. Whether
Exactly.
speeding makes me a bad driver or not, maybe my insurance carrier cares. But
Sure.
that's a really interesting thing in terms of consumer demand changing. I think for maybe the generation before me, I'm a millennial, we had a little bit more trust in our insurance carrier or our financial institution to sell us very complicated products that we sort of now see changing consumer dynamics where folks want to have a baseline understanding. They want to make sure they're not getting ripped off. They want to check that box in a way that like they feel more comfortable purchasing a product. Do you see that that's changing is like a broad market trend? Is that like brands need to have more trust today in the products that they sell, otherwise people just don't buy them?
Yes. And I think that if I think about, I'm not that many generations before you. I'm late Gen X, so that's what a
Yep.
one generation before you, right? So when I think about the way that the people that I know and the people my age have related to insurance carriers, it's still somewhat formed on the whole trust angle, right? Once you get older than me, it's all trust. It's, I know my agent, they're my neighbor. I know the company that I work with because I call the same person every time.
Right.
It's there. However, my generation is the one that got to see that start to change to, hey, now it's easy to change carriers. I don't have to wait for a renewal. Now I've got advertisements on TV that are telling me how much I can save by switching carriers. I think the loyalty thing kind of went away for a while, and you had this huge price war. That was in the middle of nobody understanding why they were getting charged what they were charged anyway. So all of that kind of came together in sort of a perfect storm, and that led to where we are today, which is the inexpensive low rates, the lowest rate possible, because consumers aren't going to think they're low rates, but the lowest rate possible is here, and it's not going anywhere. So you've got two things that carriers are trying to do. They're trying to be as efficient as possible on the one side, and on the other side, they're trying to figure out how can we build customer loyalty when our traditional method of doing it is gone. The best way to do it is to create engagement opportunities that are not built around billing or claims. And the best way to do that is through something like this. If I'm setting up a system where every time you have a situation where there's a driving element that you can improve upon, and I'm able to say, hey, I've noticed in the last week that your hard braking, the number of times that you've had hard braking or the number of times that you've been speeding has gone up. Over time, this is what that will do to the chances of you having an accident and hurting yourself. Has nothing to do with having a claim and having us have to pay it. This is about you. And I think that is the change in messaging that carriers are finally starting to figure out. And that's the opportunity that these kind of devices provide, is it's a conduit to the customer. And I think that's the part that carriers have had a hard time figuring out. So if you can't build loyalty through your traditional partnership, you've got to find an alternative system. And if the alternative system exists because a customer is going to trade some information to you in exchange for some benefit, that's a win, right? And I think that's what carriers really need to figure out, and not enough of them are.
I agree. And that to me fascinates me as to sort of the obstinance or the traditionalism of the industry. But let's dive in on the customer, because that's what's going to move them, right? Is that their customers, they're seeing the benefits. So what did the customer say in your survey? What did they want?
So what's interesting is in this particular report that you've referenced, this is the second auto report. The first one was actually about 6 months ago, and it focused solely on the rewards piece. When you look at rewards, we didn't just look at offering a discount. We also looked at how much of a discount. And then we also looked at, do you want just a discount on your premiums, or would you prefer a gift card or something like that? And we did it pretty superficially. I mean, we didn't get too in depth. But what we found was that the reward doesn't have to be that significant for customers to be interested. For the lowest level that we offered, we had something like 6% that were moderately interested or better. And more than half would either switch carriers outright or look into a program that a competing carrier was offering to get that kind of benefit. And it could be either a discount or something like 20% where, yeah, I kind of prefer the gift card. So that's important information, but that still costs the carrier money. Now we're talking about the report just on the advice piece. Okay, now it's a little bit different. You're not going to get the overwhelming customer buy-in on an advice thing. It's hard to quantify what that value is until you see it. So understanding that going in, you still have 39% of all of the respondents that had auto insurance were either moderately, extremely, or very interested in a program that just offered some type of personalized advice. And most of those would change carriers or think seriously about changing carriers to get to a program like that. So if you think about it this way, let's assume that there's 100 million auto insureds in the US. There's more than that, but let's just use round numbers. That's 39 million potential customers that all they're interested in is more communication with their insurance company, but it has to be targeted. It has to be important to them. It can't just be an email that says, hey, have you seen our new annuity product? It needs to be something that means something to them. And that's really what this is telling us. It's telling us that as an industry, we need to take a step back and we need to think about not just alternative ways to reach out to customers, but we need to think about a variety of ways in one basket. So if I'm an insurance carrier and I want to reach as many customers as possible, I want to offer a traditional discount. Hey, we're going to start you off with a 5% discount, and it could vary based on how you drive. Perfect. You'll get some people. But if you prefer it, if you use this device at least on 50% of your trips, we'll send you a $20 gift card once a month. And it could be to one of several different retailers if that's what you want. And we also have another feature. You can sign up for targeted advice. And we're going to give you a free 30-day sample on exactly what kind of information you can get from us. And then you can pick and choose what you like. And if you would prefer that, we can do that as well. Carriers need to offer a variety of things because not every customer is going to be responsive to one particular thing. And
Sure.
all of those are possible, they're plausible, and none of them are overly expensive. And I don't know of a single carrier that's thinking through that right now.
Yeah, and I'm fighting the good fight on the front lines for you, Greg, going to those carriers and showing them an example. And there are many more beyond ODN. This isn't meant to be a pitch. I think there's a lot of companies who see what you see and say, how do we engage the customer better? Because it's about customer acquisition, it's about customer retention, it's about our scores, net positivity scores, about our businesses that are going to attract and grow our businesses.
Sure.
Um, but I guess, who within the organization would you suggest a company like ours reach out to? Who would buy this? If we're saying, look, the insurance carriers haven't moved, is it the chief marketing officers that need to make that first step? Is it the chief underwriting, actuarial teams, executive leadership? Where do you think that inspiration will come from?
So I think there's two places, and I think you hit on two of them. Executive has to have their finger on too much of the picture. So they need to understand, and you have to have buy-in from that group. They don't need to be the message bringer. Actuary understands the data piece. They only need to be brought in once the data is flowing so that they can interpret that and turn it into actionable rating, right? The two that really are going to have the key message, the head of underwriting is huge, because this is the person that controls the tap of information between the customer coming in and getting it to the company itself. Eventually claims has to be involved, but that's down the road. So really the head of underwriting needs to be fully informed and bought in. But it really starts with the marketing piece, because you can't just go out to customers and say, I mean, we asked fairly targeted questions, right? But we didn't come out and really go into a lot of detail. These were pretty generic. What if it was something like this, 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 or this? What if it was that? What if it's kind of greenish blue, or, so we weren't being real specific. That's where the marketing officer is key, because a marketing officer could make or break this. A marketing officer really needs to understand the consumer sentiment,
Mhm.
which we're providing a baseline for you. All you have to do is dive deeper into what we're already starting. Then you take it one step further and you start thinking, okay, how can I design a product around what these customers want? And you don't have to offer all of the options. You don't have to have a buffet on day one. But if you can come in with one thing different from, this is how much, then a 10% discount if you use this device, then you're already going to be differentiating yourself. And
Right.
that's the key thing.
There's 39 million customers waiting
Sure.
for you to
And
engage.
there's one other point that we really haven't touched on, is when you're just focused on the discount model, and this is something else that the marketing officers can really control or have a play in. The advertising focuses on the best it will ever be, which is practically unattainable for just about every driver out there. I have used one of those. I've been a member of one of those programs. I used it. I watched my initial discount, the one that you get for signing up, go down as my driving score stayed the same. The
Mm.
feedback I got and everything, but the discount kept going down. And it got so frustrating. I understood the data that I was trading. And in exchange, the only thing that I could get from my company was a discount. And the discount I was getting got down to about 1.5, 1.8%. I'm like, okay, now it's not worth it anymore.
Yep.
And I think that's the disenchantment from the customers. You don't want that. So you have to stay away from that angle. And I think focusing solely on the discount, you're just opening the door for that.
Absolutely. And yeah, I think you hit on other good examples where there are opportunities to engage customers in other ways. You talked about with sort of safety information. In the
Sure.
survey, did you touch on any other ways that you felt like positive engagements could be attained?
For the most part, in this particular report, we talked about safer ways to drive. We talked about vehicle upkeep and maintenance. That's a challenging thing, but if you're connected to the car as an insurance carrier, you have a unique position to be able to tell people, hey, we've noticed that you've taken all these trips, and it might be time to take a look at your, oil change records, or,
Sure.
have you checked your tires lately? Nobody else, the people that do the work, don't have a connection to your vehicle. All they know is that roughly in 3 months, you're probably going to need an oil change. Well, if you're working with your insurance carrier, the insurance company can be that reminder for you. So that is beneficial to some people. You could even, the advice that people get, being able to provide people with feedback about ways to, I don't want to say drive safer, but there's, for example, there is an insurance company in Poland. They advertise their telematics service as, if you sign up for this service, it could save your life. They don't advertise a discount. They don't advertise any type of gift card or money back. They might do that, but that advertising gets people interested. Now you can have the conversation, and it's just a simple thing. And all you're going to tell people is, look, if you drive this way to work, you go right through this intersection where more people died in this city than any other intersection last year. But if you go this other route, it takes you 5 minutes longer, but the chances of you having an accident are 40% lower.
Right.
That data's out there, and you can provide it to folks.
Yeah, I actually was thinking about this, if we're going to bring it to current events during the current COVID-19 epidemic and outbreak, right? Insurance carriers who are in the healthcare industry are probably pumping out a lot of content related to washing your hands and making sure you use disinfectants. It's sort of that. It's other risks, applying this to many other risks that may, on a day-to-day basis affect their insureds. Could you think of other examples? Or I don't know, COVID-19 was the one that I was obviously thinking of for relevant.
Sure. So and what's funny is that on the, if you think about life and health insurance, not life insurance so much, but really health insurance, that whole ecosystem is already prepared because you have a whole network of devices. I mean, I use a Garmin watch for running, right? Well, it tracks all kinds of stats for me. Anybody with an Apple Watch or a Samsung Gear Watch, you've got all of this health information on your wrist. That type of information plays right in with health coverage that in general is ridiculously expensive to start with. It's almost a perfect storm. And it's a great opportunity for people to go in and say, okay, I've got all this data. Can I share it with my health insurance carrier and maybe get a little discount on these ridiculously high premiums? Right.
Yeah. Or alert if I'm at risk of a stroke or a heart attack or something. Sure.
And I guess that market, that technology is mature enough to where that's ready to go right now.
Yeah.
The auto piece is getting there. And I think that this technology opens so many doors for what's going to be coming down the road for auto insurance and what is going to be coming down the road just for people in general, that I think carriers that really get involved with this now so that they can become really comfortable with the data, really understand where it's coming from, what kind of data it's what it's telling you. Because keep in mind, this data doesn't just come from one place. You've got car manufacturers are now building the black boxes and the telematics devices right into the cars. Not all of them, and they're at all different levels of maturity, but they're getting there. So that's one source. Then you've got these devices that plug into the car in some way. Some are professionally installed. The UK is famous for that. And then you've got a lot of others that are just smartphone based or maybe smartphone with a tag. So you've got all these different data sources. As a carrier, do you really understand what the differences in data are? Do you really understand why it's important to maybe have 2 or 3 different options for people to use for data collection? Those are some of the questions that need to be sorted out next while you're figuring out the best way to talk to your customers about this stuff.
Yeah, and I think you point out not only the key challenges that the insurance carriers face, which I think the lens that a lot of executives, when they're evaluating whether to bring in a telemetry program or make an investment in doing these gift cards and other incentives, right? It's a cost to the business. I do hear a lot of them weigh those challenges. I don't know that there's as much conversation really about the focus of your report is what are the opportunities that we're not seeing here, the benefits that we could create from this data if we think of it as not just an invasion of data collection and a sucking out of everyone's information, but actually a means to create, it's a recipe for something new. And what that is, I think there's an infinite well of potential, and certainly your research suggests that there are many applied scenarios that you could imagine It just takes imagination and creativity, maybe.
It- I guess one of the things that really strikes me as I do more and more telematics based research and really IoT telematics, all of that stuff, is from a regulatory standpoint, it's really not scary for regulators either,
Yep.
because regulators have to protect the consumer. So if a regulator can go and say, well, the reason that your rate is high is because you're not a very good driver, here's all the data to prove it. That's a much easier conversation to have than, well, everybody is a bad driver. Therefore, all of our roads are too packed with bad drivers and everybody has to pay 10% more.
Mhm.
It's an easier conversation to have. So in many cases, not all of them, there are some states in the US that are somewhat challenging, California, but for the most part, most state regulators are starting to really come around to this. And, in one of the people that I has really looked at this and worked with me on some of the reports, not getting the reports done, but just helped me see the carrier point of view, is a guy from the Insurance Bureau of Canada who speaks for carriers. It's a carrier organization. They try to get ahead of trends. This is one of the things that he is all in on. And from a regulatory standpoint, that's one of the biggest messages he has, is that, look, you can go to a regulator and say, hey, we want people to pay insurance based upon how they drive. Wow, what an amazing concept.
Yeah, and I'll take it one step further to add to that example. Maybe you'll use our example in the future. Is that when we risk rate people based on the characteristics of the road that they drive, whether they're
Mhm.
on really unsafe roads, it actually reduces disproportionate discrimination. You come to find that if you don't rate people based on who they identify as
Mhm.
or their financial history, you end up opening up sales opportunities to people you could not otherwise qualify, and yeah, expanding your sales market as well. I want to touch on that. I want to keep going down that vein briefly because there's been some recent news about insurance carriers pairing up with auto manufacturers. There's Allstate teamed up with Ford and Lincoln to do a telematics integration.
Mhm.
Toyota and Nationwide are launching a usage-based insurance program. Um, I'm curious to know what you think this means for drivers. If our focus is on the customer, how is this going to impact them? And then maybe also the insurers.
Sure. So really, those are two different things. On the one hand, you've got the Ford tie-in with Allstate. Essentially, what Allstate is saying is that they're giving Ford customers an easy way to provide their data. Ford has, I think it's in sync, or their Ford Sync. Ford
Yep.
has a system, right? They're working with Allstate now to give Allstate access to that data. Um, Data access, data is valuable. So Ford controls the data that comes from their cars. What Allstate is doing is they're skipping the whole device thing. All right, we're, as a customer, if you're a Ford customer, we're not going to make you put a device in your car. We're just going to use the data that your car generates anyway. It's already there. I think more people would be inclined to try the product if they don't have to jump through an extra hoop of getting a device and putting it in the car, or just keeping it in there or downloading an app or whatever. So
I
um,
wonder too if they will have awareness of it. Do you think there's a risk for consumers who really love a Ford Escape and have always driven always driven a Ford Taurus, just want a Ford Taurus? Can they get out of it?
yeah, I think it's got to be a buy-in. I mean, you have to buy in. Now the data is going to be collected. The data will be collected in the box. It's there. Getting the data out, generally the consumer has to be involved. In that particular angle, I think Europe is ahead of the United States in general, because of GDPR and everybody tiptoeing around that particular set of rules. But the US isn't, I don't think you're going to see companies in the US just taking the data. I think there's been too much bad press around that. And if you're really trying to build a relationship with a customer, the worst way to start it off is by saying, hey, we've been collecting data on you for 3 months and you didn't even know it. So I don't think that's going to be as big of an issue, but I do think you'll see more manufacturers. And it doesn't necessarily mean that that has to be an exclusive relationship either. Ford could turn right around and say, okay, you know what, State Farm, we're going to give your customers the same option. Because it's just a deal between the carrier and the manufacturer.
Sure.
The other situation's a little bit different, because what you're seeing is you're seeing Nationwide and Toyota enter into an agreement where Toyota customers have the opportunity to actually get nationwide policies easier. So subtle differences, it's still a data exchange, but it's almost like steering a customer towards a particular carrier. I think those kind of partnerships are also going to be taking over in the future. Not all of it, but it'll be part of the picture, which it never was before. Um, I think that what you're seeing is the very, very early stages of maybe I think it'll be a bigger change than people think, but at the very least, you're going to start to see some significant changes in the way auto insurance is marketed and sold. And for US customers, it's going to look very different. In Europe, you can already go and lease a car and it has everything in it. You know, there's that car company, the manufacturer or the dealer, they have a deal with a local agent. They're just, if you want it, they'll roll the insurance right in. And it makes it easy. In the US, I don't think you see that as much, but I think that you'll start to see more of that. So it'll be different for them. It's new, right? I think once you think beyond that, then you need to start thinking about mobility in general. And this is, you know, we can get way off the rails here, but this is kind of where I'm trying to connect the dots between the shift towards telematics and more portable data generation to what does the future of auto insurance look like? And when you think about the future of auto insurance, people buying personal vehicles, it's not like that's been growing consistently lately. Not as many cars are being sold to each individual person. The cars that are out there are lasting longer. You're having situations where people, you know, maybe they don't have as many vehicles as they used to. But even more important, let's take that a step further and start thinking about, okay, I realize we don't have autonomous vehicles right now, but we will have something close to that, if not that, sometime. Is the right time to start thinking about what that means now or when it's right around the corner? I don't know. And are we right around the corner? I don't know that either. And I'm not sure anybody does. I've heard people say, oh, it'll be 20 years. Well, at the same time, I've ridden in a couple of cars and driven a couple of cars that pretty much took care of all of it themselves. That seems a lot closer than 20 years to me. Sure that there's kinks that need to be worked out, but that's something insurance carriers need to think about. The other thing that really keeps me up at night is right now, worldwide, something like 55% of the world's population lives in urban areas, cities. That's expected to grow over the next 10 years or so to about 64 to 66%. 2/3 of the world's population will live in a dense area. Doesn't have to be a big city. You know, I live in a city in Germany where about 600,000, the greater cities, maybe 1 million, but it's very compact. It's not like the US. We have bike rentals everywhere. We have scooter rentals everywhere. We have the little personal electronic scooters. Those are everywhere. Several different brands. That's true in cities all over the world. Who's paying for those accidents? That's a question that I don't know. All right. So if I live in Germany right now, I don't own a car here. So I get around using public transport, but I could also rent a bike or rent a scooter. Well, if I don't have a car here, I don't have an auto policy, which, by the way, your auto policy is probably not going to cover you in one of those modes of transportation anyway, because they're all motorized, right? For the most part, your homeowner's insurance probably isn't going to cover you either because it doesn't cover vehicles that are designed for use on public roads. So you're in kind of an insurance gray area. So here's kind of what I think. I think you're going to slowly start to see your traditional auto insurance policy evolve. And right now, it's probably going to be more along the lines of different endorsements that you can add. But I think eventually you're going to see more of an a la carte type of insurance. For me, I might buy a general vehicle liability policy so that if I'm traveling and rent a car, or if I'm home and rent a car, I'm covered. All right. And then maybe I also add on an option for, you know, low horsepower city travel. And that's something I can add on. And maybe I can add on another option. So anytime I rent a vehicle for less than 4 hours, so if I'm renting one of the little scoot cars in the cities that they have that you can drive for an hour, 30 minutes or whatever, if I do something like that, well, that's a different piece. I think telematics gives carriers an opening to that, because what telematics does, it links through your smartphone.
Yep.
So now you have a link between how I drive my car, how I drive my scooter, how I ride my bike. All that data can become, this is how I get around and how risky I am when I get around. Maybe I'm an okay driver, but I am just horrible as a bike rider. Maybe that should have an impact on my rates. And I think the only way you get to that is through telematics. So that's a really long answer to basically say that I think down the road, you're going to start seeing more carriers take telematics and use that as a jumping off point to kind of get to what the future of auto insurance is going to be.
Absolutely. And I can't tell you how many carriers say we want to reduce the amount of friction to get customers to buy a product from us. You see these innovations with mobile apps and with new designed websites that improve user interface and design. And I say to them, the first thing you can do is get a telematics program up and running, because what you're getting is so much context about that individual. Maybe
Right.
not even how they drive, but where they drive. You want to target them for a discount and you know that they drove by 6 Dunkin' Donuts in the last, 3 days. There's so much information that can be connected to a driver based on where they are located, and frankly inferences that you can make based on how they move and how they get
Sure.
around. That I think you're right. And if I was, had my ways as a statistician and as someone who thinks from an actuarial perspective, you can get towards a more global model of risk that way faster
Yes,
than acquiring
exactly.
customers.
And there's two other things that I want to touch on. You mentioned the global model. Insurance markets around the world are at different levels of maturity. Some of the more mature markets are the more challenging markets for carriers to make change. I would encourage carriers to look outside of your area. Start looking at areas in South America and Asia where some of the insurance markets have developed around a digital centerpiece.
Hmm.
These are not markets that started with the Lloyd's model. These are markets that started with a bunch of people with little flip phones where they could get a text and do their banking that way.
Sure.
That's a different type of market than what these people are used to. And the second thing is, as we really talked to these customers, we started that whole conversation by asking them about how comfortable are you using these types of devices? Because when you really talk about it the way we are, sometimes it sounds kind of creepy. Well, I know they passed 6 Dunkin' Donuts. You know what? Consumers know that. I think that consumers, based upon the feedback that we got on the survey, I think consumers are pretty much aware that, you know what? Everybody is spying on me. So I may as well try to take advantage of what I can. And
Exactly.
and I think that's kind of the point that we're at is, don't try to hide the fact that, hey, this is the data we're going to collect and this is what we're going to do. This is what we can tell you. Start telling them, and this is what it means for you. That last step, that's the piece that people want to hear. And if you can do that and you can convey that message properly, I think the first carrier that really can do that is going to have a leg up on everybody else. And they're going to have a window where they're going to be able to really start to build some loyalty. And a retained customer builds an efficient business. So I think it's a huge piece. You can't go out and just churn your book of business all the time and also try to be an efficient business. You have to keep the ones that you want. And the way to do that is through devices and programs like this, where you're communicating with people in non-confrontational ways.
Yeah, absolutely. Well, we when we go in to have conversations with folks and tell them about and preach this same opportunity, and folks say we're tracking people where they are. I'm like, open up your phone and look at how many devices or how many applications on your phone that you've given GPS location information to. You've definitely given it to Google Maps or Apple Maps or whatever mapping
Mhm.
software you use to route to and from where you're going. You've probably given it up to your social media accounts. For whatever reason, people feel very comfortable showing their or sharing their location information
Right,
to external parties.
right.
I always think like hard-braking speeding, the things that telematics collect are things that I have much more resistance to. I don't want the cops to know that I'm speeding, right? I see, I slam on my brakes. It's the same idea. If I knew my insurance carrier was watching my speeding, I might not want that sort of invasion of privacy. But I would tend to agree that for whatever reason, culturally, at least in my context of the United States and my era and generation, speaking on behalf of myself, much more willing to give up location information without
Sure.
really asking a lot of questions.
Agreed.
Yeah.
Agreed.
Well, Greg,
Um,
I
yeah,
want
go
to ask
ahead.
you one, if there was anything that you thought was sort of the next frontier. We've sort of touched on that a bit, but I want to make
Sure.
sure, I know you're continuing to write reports, and
Yes.
would love to hear what's coming next.
So from a telematics standpoint, I think the whole mobility question is my next area of research on that angle. And I kind of alluded to kind of what I think. I was fortunate to go to a conference recently before, it became
Or there were no more conferences.
scary to go to conferences. But I went to a conference recently that was not insurance focused, it was mobility focused. And it really opened my eyes to some of the gaps that are there. And I talked to some people that are founding some of these companies. I talked to a guy that he's the CEO of a scooter company that, he gave a talk and I listened to it. And then I asked him after, like, who pays for accidents? And he goes, we'll pay if it's our fault. He goes, but the problem is that if it's not our fault, that's a huge open area.
Yeah.
And that's a challenge. And there's one other aspect to the whole advice piece that I've touched on it in the past with some reporting, and I'll probably go back and revisit it. And we've talked about it some here. It's the whole data platform piece. When I first started covering telematics over the last 2 years, I mean, it hasn't been that long. Telematics has been around for a long time, but it's really taken off lately because of smartphones, right? When I first started looking into telematics, everything was around, okay, yeah, we offer a plug-in device or we offer a smartphone app. I think the next evolution of that is because of all the different sources of this data, whether it comes from, and this kind of goes back to my whole mobility thing, right? Whether it comes from the vehicle because the manufacturer has it in there, a device that you got from your insurance carrier, a device that you got from some third-party carrier, or whether it comes from your scooter app when you go on to your Lime scooter app to get your scooter, or whether it comes from your Mobike app or whatever. Wherever that data comes from, it all needs to go into some place where the insurance carrier can get it. And it needs to be homogenized and made usable. That system, that platform is probably that's the next evolution of this. And I'll probably be writing about that later this year, simply to try to figure out who's in that space, what kind of progress are they making, where do they see the data coming from, how are they interpreting it for carriers. That's a big deal. And I think that you're going to see some telematics firms really start to shift their focus from we're going to provide you with a device to we're going to provide you with an entire data ecosystem so that you can pull in stuff from everywhere else. And it'll become, to insurance carriers, it'll become kind of like core systems have, right? Where you have several carriers, everybody has these functionalities that they offer, but they're all a little bit different. I think you'll have that too. And you'll have to, all right, I identify with platform A or platform B. So I think that'll kind of be the next iteration of this. And then beyond that, I don't know. I'm excited to find out, because it's a big change based on what I've spent most of my life learning about, right?
Well, Greg, I think you're a vanguard in helping us both understand what has happened, in the last 5-10 years, and how dramatic and transformational consumer interests are, technologies have become, and how quickly insurance carriers are going to need to modernize to leverage and take advantage of some of these opportunities. So I would encourage you to keep that enthusiasm.
Absolutely.
Keep writing, because we are loving the content that you're putting out. It's helpful for us personally. I'm thankful and grateful for, as a startup company, that there's companies like Aite that are doing this market research with us. But also just being a great advocate for the advancement of technology and the adoption of data and the thinking outside of the box about possibilities, not just threats to the business. So
Perfect.
thank you, Greg. I really appreciate your time here. It's been a pleasure.
You're welcome. And thank you so much for having me. I've enjoyed chatting about it.
Yeah, it's not every day we find a comrade like you, so thank you. Well, this has been The Golf Course with Carrie and Nadeau and Greg Donaldson, the Senior Analyst at Aite Group. and author of the report, U.S. Auto Insurance, Increase Engagement with Personalized Advice Programs. We'll link to the content below as well as to Greg's LinkedIn. So go connect with him, ask him all the questions, invite him to your conferences, even if that's, a digital call
Right.
these days. I think, Greg, I just can't wait to hear more from you. So thanks again for being on the podcast.
Yes, thank you as well. Anytime.
All right. This has been The Golf Course with Carrie Ann Nadeau, your host, along with Dirk Dobler, founder and CEO of Parento. Thanks for joining us, and see you next time.